Yes, my name's Bridle. I'm the Business Development Manager at Savannah Resources, and the first thing I should say is pass on David Archer's apologies. David is our CEO. He was due to give this talk, but I'm afraid he's been called away on other matters. Now, I think you can sort of take that as an indicator of how our business is developing. I will run you through our business as best I can, but things are moving along very quickly and all in the right direction, and David has to be somewhere else, I'm afraid, so I pass on his apologies. Just to give you a very quick overview before I go into any detail, we have 3 projects of interest. We have some high-grade small copper assets in Oman. We have a joint venture with Rio Tinto on some mineral sands, which is titanium minerals, in Mozambique. But our lead project, which we only acquired 18 months ago, which will be the main focus of my talk, is a lithium project called MINA de Barroso in northern Portugal. Just to quickly give you the facts and figures on the company, so we're AIM listed, SAV is the ticker, share price about 6p, market cap about £50 million. Major shareholder is a Omani conglomerate group, lots of businesses interested in lots of different industries, but they got involved with Savannah when we were focusing on our copper projects in Oman, but they've stuck with us as we've developed the business from then on. Slipstream Resources with 5% are our JV partner on our project in Portugal, the lithium project. Hussein, another Omani, representing another Omani group there, similar story to Al Marjan, and David Archer, the CEO, with just under 5% himself. As you can see from the share price, we've had a good run in recent times, obviously up to that spike, and I'll explain what that spike relates to recently. Come back a bit since then, but I think the direction of travel is still very favourable, and we've obviously outperformed some of the indices. I think the gold is the AIM mine, blue is AIM mining, and blue is FTSE All Share, and gold is the AIM mining sector. So we're doing relatively well against those peer groups. Yes, the executive team. So this is David. This is what he would have looked like if he was stood here. I think the key thing to pull from this slide is David and Dale Ferguson, our technical director. They are mining people. They have taken projects from early stage through the evaluation stage, through the financing, through the commissioning, through the construction, into operation. So they are mining people, and they are backed up by a raft of geologists, engineers, some fantastic consultants that we were also working with. So these are people who can build mines and keep them operating. And the mine that we're proposing to build in Portugal is certainly of a smaller scale than the stuff that they had done previously in Australia. Martin Steenbelt, a German gentleman, is our in-house lithium expert. He was previously with Rockwood Lithium and Albemarle, one of the world's biggest producers of lithium. He's tasked with finding us a customer for our product from the MINA de Barroso project. Michael McGarty is the CFO. He's been with the company the longest of our executive team, very competent accountant, and keeps us in good order. What are we trying to do? Our target is very simple. We want to be Europe's first major lithium mine. No ifs, no buts. That's what we want to do. I'll explain why we want to do that. Are we crazy to try and do this in Portugal? No, we don't think we are. Portugal has a modern mining industry. It's had a fantastic history in mining going back to pre-Roman times, but it has a modern mining industry. It is already a small producer of lithium. As you can see, that the big boys in the lithium space are Australia and Chile. Australia has just got to the top of the charts here. It's had a number of operations open in the last year or two, and it's just taken over Chile. But Portugal is on there. And the production in Portugal at the moment is feeding into some traditional markets for lithium. It's used in ceramics and glassware, and obviously they're very big markets in Portugal and into Spain as well. So that's why there's been lithium production in Portugal to date. We would like to take that lithium production in Portugal up the list, and if we do what we say we're going to do, we'd end up in about 5th place. Portugal would end up in about 5th place on that list. So we think the operational risk in Portugal, obviously an EU member state with a mining history, is not a bad place to start. This is why we want to do it, this chart here. So as I say, the traditional markets for lithium are in glassware and ceramics. We're all aware of lithium-ion batteries in mobile electronics, mobile phones, laptops, cameras, all this kind of thing, and that's been a fantastic area of growth for the lithium industry. But it's really electric vehicles and power generation on a far greater scale, which is going to drive these kind of hockey stick charts. And whoever you talk to, whichever forecaster you want to follow, they all have this kind of hockey stick look about them in the lithium industry. And it's really driven by legislation to a great degree. As it says here on the slide, the EU is consuming 24% of battery-grade lithium already. And to deal with greenhouse gas emissions in this region, and traffic is the second biggest producer of greenhouse gases in Europe, behind power generation itself, there's some very tough guidance being put in place. So they want to have a reduction. This is from 1990 levels, but they're talking about now reducing it from today's levels. They want to bring that down by 2050. They want to have 80% less CO2. This is generally. They want to have 20% of new vehicle sales being electric vehicles by 2025, and they want to have 40% of new vehicle sales being electric vehicles by 2030. So the race is on to provide these electric vehicles, which are going to be zero emissions, which are going to help the EU meet its targets on greenhouse gas emissions, as well as dealing with other pollution issues and health matters. So that's why we want to do it in Europe. And where are we doing it? Okay, sorry, it's a little bit grainy, this chart, but basically there's Porto up in there we are, there's Porto, up in northern Portugal. If you get a car and you drive on these lovely EU-funded empty highways, you end up, after an hour and a half, at our project in the Barroso Hills. This is an existing mining license. It's a 30-year license. We will need to amend it to do what we're going to do, or we will need to get a new version. But there is a premise set there for mining in this area. We've acquired 75% of this project. We've acquired that from another Australian group. We've paid, through cash and shares, we've paid about £6 million for our 75% stake, and that all happened in May 2017. A little bit of a closer look at the license area. As you can see, there's a number of deposits. The red lines are the major deposits. So there's going to be a series, we're proposing a series of surface mines, open pit mines, feeding into a processing plant. I'll show you another slide with the layout later. There are other deposits. We've only really worked on these areas, and we've gone from a resource of 0 million tonnes to 20 million tonnes in that time. The grade is about 1% lithium, so we've got about 200,000 tonnes of contained lithium in there. And what we're proposing is to, in a very orthodox fashion for the mining industry, open pit mine that at about 1.3 million tonnes a year, which isn't a great deal within the mining industry context. Crush the rock, grind the rock, treat it through using gravity and froth flotation, which is another very orthodox mining process, to produce a 6% spodumene, which is the lithium mineral concentrate. And we will then truck that away from site and sell it to an end user, to a customer. And that's what we're planning to do on this site. This is an existing quarry. This is what we're chasing. This is what we're proposing. This quarry is on this little block here. And that's not dissimilar to what our operations would start to look like. They would then get a lot bigger. We did a scoping study, so an early stage economic assessment of the project. Once we'd established a resource on it, which we did through drilling, we've drilled about 20,000 metres of drilling onto this thing. At the time of the study, which was done in June, we had a 14 million tonne resource. That's now gone up to 20 million tonnes, as I've said. But the outline of the operation was an 11-year life of mine, as I say, producing 1.3 million tonnes of ore, or 175,000 tonnes per year of the spodumene concentrate, which contains about 26,000 tonnes of what the industry likes to call lithium carbonate equivalent. Now, what that means, what that equates to in terms of how much lithium you might want to put in your vehicle, vehicles tend to have about 40 to 80 kilograms of lithium in them in the battery pack, which is going to generate the power. So this is about somewhere, depending on the type of car you're talking about, 250,000 cars or up to 500,000 cars of lithium requirement, if that's how you want to measure it. To build this mine, we're saying it would be $110 million, which is a relatively achievable amount of money in our view. We assumed a lithium price of 685. Current price is maybe around 800. As I say, 10, 11-year life of mine, and we produced a net present value for this of $356 million US. That's a pre-tax number. It's about $240 million net of tax. and a very fast payback, 1.7 years, because we're saying our operating costs are $271, we're selling it at $685, it's a nice margin, we generate a lot of cash very quickly, and we can pay off the capital expenditure. So that's our premise, very attractive economics. On the back of that scoping study, we raised £12.5 million from the market. That's giving us the finance to complete a feasibility study, which we're doing now. That will hopefully be finished and published early in the second quarter of next year, which will be a far more detailed study. It will really put some meat on the bones of this initial project. But there was certainly a lot to like about it. It de-risked the project a lot. Just quickly showing you the flow sheet. This is what the ground looks like, just so you can see. This is kind of pine forest here on these low hills. All of these cuts you can see, this is our drilling campaign where we've cut through and made some drill pads, and we're drilling off our resource as is required by the market guidelines to give you that 20 million tonne number. This is what these tabular bodies look like going into the ground. 500 metres wide, more than 500 metres long, about 50 metres thick. From a mining perspective, this is all very achievable things. This is a cross-section of one of the pits that we're proposing. In fact, here you'd have 2 stages of mining, but not wanting to get bogged down in detail. I think, as I say, the key word really is this is all very achievable from a mining perspective. Here on the layout of the operation, as I say, the red areas and the orange areas are the surface mines. We're going to put the waste here, which will be contoured and revegetated to match that kind of hilly terrain that you saw a moment ago. The plant site would be here, and then, as I say, we would produce a concentrate, and then we would sell that off to site, and that would then be subsequently processed into either lithium hydroxide or lithium carbonate, which then goes off into battery manufacture, and probably will eventually go into the next car you buy, or your mobile phone, or your power tool, or your lawnmower, which are all going to use, or already are using, rechargeable batteries. That's just giving you the resource numbers for anyone who's particularly interested. As I say, the key number is that 20 million tonnes at 1% lithium, with 200,000 tonnes of lithium in the model. Just to put that 200,000 tonnes and that 250,000 cars, or up to 500,000 cars figure into context. So in Europe at the moment, this year they think they'll sell about 900,000 electric vehicles, which is about 5% of total sales. Europe is a relatively big adopter of this. China is by far and away the biggest electric vehicle market and will be going forward, but Europe is obviously buying into this, very much driven by the legislation. So we're saying with our 250,000, 500,000 cars a year, we could kind of do half of what the EU requires today. But as I said, the EU wants to have 20% of its vehicles, new vehicles being sold, being EV. So there's plenty of room on the demand side for projects like ours and a number of others to come and satisfy that demand, I believe. This is just a quick overview of the schedule that we've set ourselves. It's a very aggressive schedule, but we want to get into production. We've said we want to be the first people in Europe to do this. As I said, the key point was the feasibility study completion. We're well underway with that work. That should be in early Q2 next year. And if we're clever, and we're already in conversations with potential customers, potential financiers for the mine, we can draw those conversations together with the publication of that document. Hopefully that will answer everyone's questions as they go along. And then we can move quickly to a point where we're deciding if we're going to do this thing, and we can finance it, and then build the mine and be in production by 2020. That's our aim, and that fits in, as I say, with a lot of that regulation and targets that are coming in from the EU. Are we the first people to try and do this? Yes, there are a number of groups working in Europe. We would like to be the first of those to be in production, but we're certainly not the first people to suggest digging spodumene ore out of the ground to process it into a concentrate and sell it at that point. Altura is a kind of forerunner to what we want to do. This is an ASX-listed business. They've gone into production in the last 6 or 9 months. They've just shipped their first concentrate to China. So they're mining the same material that we are, producing the same concentrate that we plan to produce. using the same processing techniques. I think the key point to make is that our market cap is 50 odd million pounds, and theirs, when I drew the slide up, was 219 million pounds. So to get from where we are, if we can complete all the steps, raise the money to finance the mine, build the mine, get into construction, get into production, and begin to sell this product, that's where our company should be going. So hopefully we're walking a path that has been walked before and very recently by Altura and a number of its Australian peers. And there's a slightly wider peer group. So some of you who are interested in AIM may know names like Bacanora, European Lithium, and Codal Minerals, who I know have presented in this series before. So we're not alone on AIM trying to be a lithium producer. We just think we're a little bit ahead of the game, and our project is an achievable one in the sense that it's not too big and it's not too small, and it's in the right place, and it's going to be selling into markets that want the product. So hopefully we will see our valuation rise, but we've got to get all of these steps completed. Just very briefly, as I said, we have three projects. Our copper assets in Oman, we have two sort of key projects. They're both held in joint ventures with local partners. There's a small resource on one of them. 2.2% copper is a great grade. This could be a very nice producing asset for a small company. We're just waiting on some licensing here. We've had all the ticks in the boxes from the relative departments. Eight different ministries have all said that they have no objections to our mining license application. We're just waiting for that to come through, and then we can start to move again on these licenses. And another company operating in Oman, Alara, has just had its license in the summer. Just got its mining license, which I think was the first for a foreign company since 2004. So that, again, the precedent's been set. We should be next in the queue, and we hope to be able to sort of revisit that project when the license is there. And then on Mozambique, we're working with Rio Tinto, which I'm sure is a name you'll be very familiar with. As I say, it's a large mineral sands project called Mutamba. The mineral sands is titanium oxide, so think about white paint and white pigment. It all comes from titanium dioxide, along with zircon is the other mineral of interest in here. It's a very big project. We have a 20% stake at the moment. By completing a pre-feasibility and then a full feasibility, we can get up to 51% in this project, which would be a fantastic place to be. Again, just waiting on a ticking the box from the authorities on the license, and then we can really sort of motor with the work. But in 2019, the aim is to produce the pre-feasibility study on that project. And strategically, based on what's happening up and down the east coast of Africa, I think that project could be very important. Right, just to sum up. Oh, I've got 3 minutes to go. This is fab. Right, so yes, the top priority is MINA de Barroso, lithium mine, northern Portugal, going to be producing 26,000 tonnes of lithium a year in a concentrate, which is enough for 300,000–400,000 cars, which there is absolutely a demand for that. And that's just automobile. As I say, we haven't even talked about other forms of power generation and enormous lithium batteries for powering hospitals and blocks of flats and all this kind of stuff. So there's a very strong demand outlook for lithium, both in Europe and globally. We think we can satisfy some of that demand with this project. We think there's a good opportunity to get it into production and a low risk to do so. And I think, why don't I stop there with 2 minutes to go?
That's it. Very impressive.
There you go.
So we'll open it up for questions. I can see there's already a question there.
Oh, sorry. Yes, go ahead.
Thank you, Asa. I mean, tremendously positive situation you're in. I'm also conscious that Oman has been significantly delayed.
Yes.
And what knocks on from that is you said you still need to amend the license in Portugal. It strikes me two things. Firstly, are you likely to envisage difficulties with the Portuguese government in terms of timing for the production? And are they also likely to try and extract significant financial extras from you in order to give it?
Good question. I don't think we foresee a problem with the Portuguese authorities. Portugal has announced a lithium strategy. They want to utilise their lithium resources. They're aware of their lithium in-ground resources. They want to be creating a situation where those can be exploited. I think, like all the other countries involved with the lithium industry, probably what they ultimately want is to also have a lot of that downstream processing in country. I know that going to a presentation myself recently from Chilean ministers, they were saying, you know, they want to have battery production in Chile. They don't just want to be making the raw material, they want to make batteries as well. And I think perhaps Portugal wants to do that. So there is a stated strategy to develop lithium in Portugal. In terms of financial exploitation by the government, so I think it's very unlikely. There is a 3% royalty due to the government, which comes with the project. So we will be paying that royalty. Obviously, we will be generating a lot of tax revenues as well. So I think, this is in an area where there isn't a huge amount of employment. We could be a very significant local employer as well. So there's a lot of positives about approving this mine. Obviously, we will tick every box that we are required to do so to make that happen. But I think if I was in a Portuguese ministry, I would see this as a positive thing for this part of Portugal and for Portugal in a wider context as well. Does that answer your question?
Yeah,
yes.
I'm a shareholder, so I'm
Right.
hoping you're right.
Okay. Oh,
I'm a bit conscious of Rio Tinto Zinc's problems in Mongolia.
Mongolia.
I don't want you to envisage or encounter the same issues.
I hope so too. Again, I sort of come back to this point about this is an achievable project. We're not trying to build the world's biggest copper underground mine. You know, we are trying to build a relatively small mining project. In the context of lithium, it's quite significant. But in terms of mining in general, 1 million, 1.5 million tons a year is a small thing, and it's nothing that shouldn't be achievable. Yes, we're not trying to break world records here. Yeah.
I know we had a question towards the back, so we'll go to that one.
You mentioned that there was a spike in the share price, I think, during the year.
Yes.
Would you like
And then I didn't go back, and explain
I thought
it.
you actually did say you were going to deal with it
did.
later. So if you could give
apologies. In my excitement, I missed
it.
It was driven by that scoping study. Yeah. So the scoping study, when we put the results out from the scoping study, which gave people that first outline of what the project could be and what it could produce and the economics, that's when the share price...
Is that why it went up? And
yes.
If so, why did it come back
down again? Why has it come down? I think, well, if you look at the lithium sector in general, the mining sector in general, they've all come down quite heavily. I think for stock-specific reasons, we're into that grind work where we are just, you know, putting together the feasibility study. We're not saying a huge amount on a daily basis of, you know, this is our latest news. There has been some significant news. The resource has grown. We've got an option over that additional ground, which I mentioned. But I think, you know, we're just in a period where we're heads down, getting that work done. But there will be a number of announcements, I think, relating to the feasibility study as it comes towards its conclusion, I would suggest.
Have we got any other... Oh, another question just there.
Can I ask you a three-part question on risk?
Right.
Have you entered any forward sales, and what's your attitude towards forward selling? Do you have any take-off agreements signed? And what is your position on hedging in general?
Okay, yes. I think it's very simple. If we don't have a customer for this product, this isn't like the gold market or the copper market where you would just expect the big liquid markets where you could just expect someone to buy your product. We need to have an agreement with a customer. That's crucial to this project. And as I say, we're in discussions with a number of potential customers, and that's something that we've got to do. So, yes, we need to do that, and wrapped up in that would be, you know, parameters about what we are selling, when we're selling it, what price might be attached to that. Not all of this is announceable, of course, but yeah, that's key. So I think a lot of the things about, you know, the market risk will be dealt with by the fact that we'll get an off-take partner, hopefully a well-known, recognisable name, or certainly a key industry name, and we'll be able to say, right, you know, we've got someone to buy this product at the mine gate or down at the port, and you know, the pricing of that will be based on published indices of prices for lithium hydroxide and lithium carbonate, and that will give the market confidence and the bankers confidence that, you know, this is going to be a viable operation. So that's the first thing, I think. You know, your second point I've already forgotten. Your third point about hedging.
I was asking if you had any take-off agreements already, but I think you've said
no. Sorry. I thought you said takeover. Apologies.
The third one was, what's your overall attitude towards hedging?
Yeah, I think it's not really part of the lithium industry. We haven't got hedging. There will be price structures, I think, of various types, which will be in those offtake agreements, but it's not hedging as you might understand it with gold or other more liquid markets. That's just not how the lithium space tends to work. This is all relatively new. People are sort of working this out as they're going along, and new companies are coming, you know, into the picture all the time. But hedging, I don't think any of the industry is hedging at the moment. But you will see, you know, fixed price selling and this kind of thing.
Excellent. Thank you very much. That's
Pleasure.
great.
Thanks very much.
Thank you.